Altcoins have been written off more times than I can count. Every cycle, when prices collapse and attention disappears, the same narrative shows up. Altcoins are dead. This time is different. Only Bitcoin will survive. And every single cycle, that narrative ends the same way. The truth is simple. Most altcoins do fail, but a small group doesn't just survive. They dominate the next phase of the market. 2026 is not about hype coins. It's not about memes. And it's definitely not about chasing whatever is pumping today. 2026 is about infrastructure, regulatory clarity, real-world adoption, and institutional capital quietly positioning itself before retail realizes what's happening. So today, I want to walk you through 5 categories of altcoins we are accumulating for 2026. And more importantly, why these types of projects matter in the next phase of crypto. This is not financial advice. This is long-term conviction thinking. Let's start with the bigger picture first. Crypto today feels very similar to early internet adoption. Not the peak, but the moment where regulation, infrastructure, and capital finally start aligning. That phase is uncomfortable because it kills speculation while quietly rewarding the builders. This is exactly when smart money accumulates. Now, let's get into the first category. The first type of altcoin we rebuying for 2026 is DeFi infrastructure that institutions can actually use. Decentralized finance isn't about replacing banks overnight. It's about creating open, programmable financial rails that traditional finance can plug into. Lending, borrowing, yield, collateral, those systems already exist. Crypto just makes them global and permissionless. Projects that sit at the center of DeFi liquidity are positioned extremely well as regulation becomes clearer and capital feels safer entering the space. That's category 1. Category 2 is Oracle and data infrastructure. Blockchains by themselves are isolated systems. They don't know prices, interest rates, asset ownership, or off-chain events unless data is securely fed into them. This is where Oracle infrastructure becomes mission critical. As tokenization expands to include stocks, bonds, real estate, and commodities, reliable data becomes non-negotiable. The projects that solve this problem don't need hype. They need adoption. This is one of the most boring-looking areas of crypto, and historically, boring infrastructure is where the biggest long-term value is created. Category 3 is smart contract settlement layers with real usage. This includes networks that institutions are actually building on, not just chains that promise speed or cheap fees, but chains with deep developer ecosystems, real-world assets, stablecoin usage, and regulatory compatibility. In the next cycle, market share matters more than marketing. The chains that already host stablecoins, tokenized assets, and enterprise pilots have an advantage that newcomers simply don't. Category 4 is high-throughput execution layers. There is still demand for fast, scalable environments where consumer apps, trading, payments, and gaming can live. But speed alone isn't enough. Reliability, uptime, and developer support matter more now than ever. The next winners here will not be Ethereum killers. They will be complementary execution environments that serve different use cases. Category 5 is institutionally aligned, Layer 1 South. This is controversial, but important. As crypto becomes more regulated and integrated with global finance, there is room for networks that look more corporate, more compliant, and more structured. These won't appeal to hardcore decentralization purists, but markets don't care about ideology. They care about capital flow. Low market caps, strong teams, and an enterprise focus create asymmetric upside if adoption materializes. Now, here's the most important thing to understand. Buying altcoins is not about being right immediately. It's about surviving long enough to be right eventually. Most people lose money because they chase momentum, over-allocate, or panic during drawdowns. The investors who win in altcoins think in multi-year windows, not weekly candles. This is also why risk management matters. If you're actively trading or hedging positions while building long-term holdings, using the right platforms can make a real difference. That's why many traders use exchanges that offer large bonuses to reduce effective risk. By the way, if you want access to big trading bonuses, check out MEXC using the link below this video. They regularly offer incentives that give traders more flexibility in volatile markets. Also, Bitunix is another platform worth checking out if you want competitive bonuses and a smooth trading experience. Both links are in the description. Back to strategy. 2026 is not about all-in bets. It's about scaling enduring boredom. Periods of consolidation feel terrible, but historically they're where life-changing positions are built. When headlines disappear and engagement drops, attention shifts away from speculation and toward fundamentals. That's when conviction matters. Bitcoin will lead, Ethereum will anchor, altcoins will rotate. But only a small percentage will truly outperform. The goal is not to catch every move. It's to be positioned when the market reprices reality. Before we wrap up, one more reminder. If you're trading or managing positions, check out MEXC and Bitchenix using the links below for big bonus opportunities. Used responsibly, bonuses can significantly improve your trading edge. The next phase of crypto will reward patience, discipline, and long-term thinking, not noise. Stay focused, stay rational, and build positions when nobody cares. Thanks for watching, and don't forget to subscribe for more.